Good morning, everyone. Today we have some groundbreaking news that's set to shake up the retail world. Let's talk about a name many of us grew up with, JCPenney. This iconic brand has been a cornerstone of American retail for decades. For over a century, this department store has been a staple in American malls, serving families for generations. From back-to-school shopping to holiday sales, JCPenney has been there for countless milestones. But like many classic retailers, JCPenney has faced tough times. The rise of e-commerce and changing consumer habits have hit traditional stores hard. Last week, a huge announcement made headlines. JCPenney sold 119 of its store properties for nearly $1 billion, $947 million. This move is part of a larger strategy to adapt and survive in a rapidly evolving market. This is one of the largest retail real estate deals in recent memory and marks a major turning point for the company. It's a bold step that could redefine its future. The sale is a crucial step in JCPenney's journey out of bankruptcy, which began in 2020. The company has been working tirelessly to restructure and find a path to profitability. By selling its buildings, JCPenney is turning valuable assets into the cash needed to rebuild. This influx of capital will help the company pay down debt and invest in new initiatives. This deal impacts communities, employees, and millions of loyal customers. The stores sold are not just buildings. They are part of the fabric of many towns and cities. It raises big questions about the future of brick-and-mortar stores in an online world. As more people shop online, traditional retailers must innovate to stay relevant. Will your favorite stores survive? This sale offers some answers and shows how legacy brands are adapting. JCPenney's strategy could serve as a blueprint for other struggling retailers. Over the next few minutes, we'll break down what this deal means for JCPenney and everyone involved. We'll explore the implications for the retail industry and what it could mean for your shopping experience. We'll look at who bought the properties, why, and what it means for JCPenney to now be a tenant in its own former buildings. This shift from owner to tenant is a significant change in the company's business model. Let's dive into the details of this incredible comeback story. Stay tuned as we uncover the next chapter in JCPenney's journey and what it means for the future of retail. Every big deal has its key players, and this transaction is no exception. Behind the scenes, a complex web of negotiations, strategy, and high-stakes decision-making unfolded, involving some of the most experienced professionals in the real estate and finance industries. The seller in this case is Copper Property CTL Pass-Through Trust. This trust was specifically created during JCPenney's 2020 bankruptcy, with the sole purpose of managing and eventually selling off the company's vast real estate portfolio. Their mission was clear: maximize the value of these properties to pay back JCPenney's creditors, many of whom had been left in limbo after the bankruptcy. The stakes were high, and every dollar counted. On the other side of the table, the buyer emerged, an affiliate of Onyx Partners. Based in Boston, Onyx is a private equity firm with a reputation for making smart, strategic real estate investments across the country. After months of marketing the properties and fielding offers from multiple interested parties, Onyx Partners secured the deal with a $947 million all-cash offer, demonstrating both their financial strength and commitment to the acquisition. The deal was officially announced on July 25, 2025, setting off a flurry of activity as both sides worked toward a targeted closing date of September 8. This tight timeline reflects the urgency and precision required in transactions of this scale. For the trust, the sale means they can finally distribute proceeds to creditors, bringing closure to a long and challenging chapter. For Onyx, it means stepping into the role of landlord for 119 JCPenney stores spread across the nation, a significant addition to their portfolio. The entire sale process was expertly managed by real estate advisory firms Newmark and Hilco, who coordinated everything from property valuations to negotiations, ensuring transparency and efficiency at every step. Onyx wasn't chosen solely for their high bid. Their reputation for certainty to close, along with a robust business plan for the properties, gave the trust confidence that this deal would go through without a hitch. This careful selection process ensures a smooth transition for JCPenney stores, their employees, and the communities they serve, helping to maintain stability and continuity for everyone involved. In the end, it's a win for creditors, a strategic move for Onyx, and a positive outcome for JCPenney's future. If JCPenney sold its buildings, do they have to leave? Not at all, thanks to a net lease agreement. Under a triple net master lease, JCPenney pays rent plus property taxes, insurance, and maintenance. All 119 properties are bundled under one lease, making things simple for both JCPenney and Onyx. For Onyx, it's a steady, predictable income stream with minimal management. For JCPenney, selling the properties unlocked nearly $1 billion in capital to pay debts and invest in the business. The lease ensures JCPenney can keep operating in these locations without interruption. It's a strategic move that gives financial flexibility and stability. Both sides benefit from this arrangement. Where are these 119 JCPenney stores? They're spread across 35 states, covering over 16 million square feet. The portfolio is concentrated in high-growth Sunbelt states. About half are in this region. Texas and California stand out, with 21 and 19 stores respectively. Many locations are in or near booming cities like Austin, Miami, Houston, and Los Angeles. These are prime retail spots, often anchor stores in busy malls or shopping centers. For Onyx, owning property in these areas is a smart long-term investment. For JCPenney, staying in these locations is crucial for brand presence. The quality and strategic value of these sites make this portfolio a true prize. This sale secures JCPenney's place in key markets for years to come. To understand this sale, let's rewind to 2020. JCPenney filed for bankruptcy, hit hard by changing shopping habits and the pandemic. The company owned hundreds of store buildings, valuable but tying up cash. The solution: separate retail operations from real estate, creating the Copper Property Trust to sell off properties. The trust's mission was to maximize value for creditors by selling assets strategically. This $947 million deal with Onyx is the culmination of that plan. It's a massive payday that helps settle old debts and closes a major chapter in JCPenney's turnaround. Even in bankruptcy, smart asset management can unlock immense value. This sale is proof of that strategy's success. JCPenney's post-bankruptcy journey is a lesson in reinvention. Simon Property Group and Brookfield Asset Management acquired the retail operations, saving the company and thousands of jobs. JCPenney shed debt, closed over 200 underperforming stores, and focused on its strongest locations. The company now operates about 650 stores nationwide. The recent property sale continues this recovery, with proceeds going to settle old debts. The long-term lease gives JCPenney stability in key markets. With a cleaner slate, the company can focus on growth and customer experience. The plan is working. JCPenney is on firmer ground than it's been in years. What about JCPenney's creditors? The Copper Property Trust was created to sell real estate and pay back those owed money. This $947 million sale is a huge win for creditors, who will receive substantial payments. By waiting for the right time to sell, the trust maximized value and recovery. This patient, strategic approach benefits everyone involved. For the new JCPenney, settling these debts removes old burdens and allows a fresh start. It's a clean break from the past, building confidence in the restructuring process. Now JCPenney can move forward with a stronger foundation. What does this mean for your local JCPenney? With so many changes happening in the retail world, it's natural to wonder if your favorite store will still be there the next time you visit. The news about JCPenney's recent property sale has left many shoppers and employees with questions about the future. If your store is one of the 119 included in the sale, you can breathe easy. It's staying open for business. These locations are not closing their doors, and you'll still be able to shop for all your favorite brands and deals. The deal is all about changing who owns the building itself, not the store inside. JCPenney will continue to operate just as before, with the same staff, products, and services you rely on. JCPenney has secured a long-term lease, which means your shopping experience won't be disrupted. The same friendly faces will greet you, and the shelves will remain stocked with the items you love. In fact, for most customers, the transition in ownership will be completely invisible. You won't notice any difference when you walk through the doors. JCPenney will now pay rent to Onyx Partners, the new property owner, but everything else about the store's daily operations stays the same. The focus remains on serving you. This sale is actually about securing the future of these stores, not closing them. It's a move designed to keep JCPenney as a strong presence in your community. Any earlier closures of other JCPenney locations were unrelated to this deal. This transaction is about stability, not downsizing. For local communities, this means jobs are protected and a key retail anchor remains in place, supporting both shoppers and the local economy. The long-term lease provides much-needed stability in a rapidly changing retail landscape, giving customers and employees peace of mind. With Onyx's backing, JCPenney is committed to serving these neighborhoods for years to come, investing in the future of in-person shopping. It's a positive sign for anyone who values the experience of shopping in a real store, with real people. So rest assured, your local JCPenney isn't going anywhere, and you can look forward to many more shopping trips ahead. This real estate deal is a new beginning for JCPenney. With nearly $1 billion in working capital and old debts settled, the company can invest in its future. Expect a focus on enhancing the customer experience, modernizing stores, and improving online shopping. JCPenney will refine its merchandise mix, offering both private and national brands. Under Simon & Brookfield, the company has access to deep retail insights and new partnerships. The long-term lease with Onyx ensures stability for 119 stores and their communities. This sale is a pivotal moment in JCPenney's turnaround. For shoppers, your local store is here to stay. For the company, it's a chance to innovate and compete. JCPenney has weathered the storm and is ready for a brighter future.